3 years ago, Hobart was the hottest property market in Australia. Today, it's officially the worst. Median dwelling values have fallen by double digits. Some suburbs have crashed 20%. What the hell happened to Tasmania? And more importantly, is now the time to buy? Let's break it down. Let's start with the brutal data. According to CoreLogic, Hobart's median dwelling value peaked above $750,000 in early 2022. By 2026, the median has fallen below $660,000. That's a drop of roughly 12% at the city level, but the suburb level damage is far worse. In specific outer suburbs, prices have fallen 20 to 25% from peak. Days on market have nearly doubled. Auction clearance rates have collapsed. Investor activity has dried up almost completely. Hobart is now the worst performing Australian capital city by every standard metric. For context, during the same period, Perth has risen by over 20%. The divergence between Australia's strongest and weakest capital cities has rarely been wider. Hobart represents the most dramatic capital city correction Australia has seen since the late 1980s. To understand the collapse, you have to understand the boom that preceded it. Between 2017 and 2022, Hobart's median dwelling value almost doubled. The drivers were genuine: Sydney and Melbourne residents fleeing high prices, lifestyle-driven migration during COVID, a booming Mona-driven tourism sector, and very limited new supply. But the growth went too far, too fast. By the peak, Hobart had become more expensive relative to local incomes than Sydney. That made no sense and could not sustain. When interest rates rose sharply through 2022 and 2023, Hobart stretched buyers were hit hardest. Migration to Tasmania slowed and then reversed in some categories. Investor demand collapsed. And the supply pipeline that had been ramping up to meet boom-era demand kept producing into a falling market. The result has been one of the cleanest examples of a property bubble bursting that Australia has seen this century. The damage isn't evenly distributed. Hobart's outer suburbs have taken the heaviest losses. Areas like Brighton, Bridgewater, and Sorrel have seen prices fall by 20% or more from peak. These are the suburbs that saw the most speculative buying during the boom, outer estates marketed to mainland investors at boom-era prices. They were always vulnerable. By contrast, inner Hobart suburbs have held up much better. Sandy Bay, Battery Point, and West Hobart have corrected modestly but remain near peak prices. These suburbs have genuine scarcity value, limited supply, character housing, proximity to the CBD. The Hobart story illustrates a principle that applies everywhere in Australian property. During a downturn, quality holds value and quantity gets crushed. Investors who bought premium inner suburb stock are bruised. Investors who chased outer estate yields are devastated. Hobart isn't an isolated case. Launceston has corrected sharply too, with median values down roughly 8% from peak. Devonport and Burnie have softened. Even rural Tasmania has seen price declines as the work-from-home Mexican wave reverses. Tasmania as a whole was the biggest beneficiary of the COVID-era property boom, and it's now bearing the biggest correction. Statewide migration data shows the inflow that drove the boom has slowed dramatically. Some quarters have shown net outflow. Tasmania's broader population growth has fallen to among the lowest in the nation. None of this is fatal to the long-term property thesis, but it does mean the correction has further to run before fundamentals justify a recovery. The crucial question, is now the time to buy in Hobart? The honest answer is, it depends what you're buying and how long you can hold. For high-quality inner Hobart property in established suburbs, the answer is increasingly yes. Prices have come back to reasonable levels. Yields are improving. Long-term scarcity factors remain intact. A patient buyer purchasing a character home in West Hobart or Sandy Bay today is likely to look smart in 10 years. For outer estate property, the answer is no, not yet. The downward trend in these areas hasn't run its course. Supply remains elevated. Buyer interest is weak. There's no urgency. You can wait 6 to 12 months and likely buy cheaper. For investor-grade unit stock, be very careful. Hobart's unit market has issues with quality, strata costs, and tenant demand that the headline correction doesn't fully reveal. The general rule for any market that has just collapsed: buy quality, avoid quantity, and assume you may need to hold longer than expected before seeing meaningful recovery. Hobart fits that pattern perfectly right now. What does Hobart look like in 2029? The base case is gradual recovery from a lower base. The correction probably has another 3 to 6 months to run in the outer suburbs. Then a long period of flat to modest growth. Don't expect a rapid bounce. Tasmania's fundamentals, limited population growth, isolation from major economic engines, aging demographics, argue against another explosive boom. But the correction has been severe enough that further downside is limited from current levels for quality stock. Patient investors entering Hobart in 2026 are likely buying at or near the bottom of the cycle for prime suburbs. Returns won't be spectacular, but they should be acceptable. The speculators have left. The market is settling. That's often when the best long-term opportunities emerge. The Hobart story contains lessons that apply to every Australian property market. Lesson 1: the highest rising market is usually the highest falling market when conditions reverse. Hobart rose fastest and fell hardest. Perth in 2014, Sydney in 2017, and now Hobart in 2026 all illustrate this principle. Lesson 2: fundamentals always reassert themselves. Hobart's prices reached unsustainable multiples of local incomes. That couldn't last, no matter how compelling the lifestyle story seemed at the time. Lesson 3: quality matters more in a downturn than in a boom. The Hobart suburbs holding their value are exactly the suburbs you'd expect any sensible investor to prefer. The suburbs collapsing are exactly the suburbs that boomed on speculative interstate demand. Pay attention to these lessons in any market you're analyzing. They apply everywhere in Australian property. While headlines focus on the collapse, smart investors recognize that significant corrections often produce the best long-term opportunities. Tasmania's fundamentals haven't been destroyed, they've simply been reset. The state still has a beautiful environment, strong tourism, growing food and wine industries, and lifestyle appeal. The cyclical correction is creating entry points that didn't exist 3 years ago. Investors with 5 to 10-year time horizons looking at Tasmania today are essentially being offered prices that reflect the worst possible interpretation of current conditions. When markets correct sharply, they typically overcorrect before recovering. We're likely close to that overcorrection point in Hobart, and possibly already past it for premium inner suburb stock. Patient buyers entering Hobart now are positioning themselves for the next cycle, while most investors are still avoiding the city entirely. If you've decided Hobart makes sense, here are the specific criteria. Established suburbs within 8 kilometers of the CBD. Character housing stock, not new builds. Properties priced below $700,000 where the land component is significant. Avoid units in newer developments completely. Strata issues and oversupply make these the worst performing segment of the market. Avoid outer estates regardless of price reductions, they have further to fall. Focus on the boring, fundamentals-driven middle of the Hobart market. Character cottage in West Hobart at $650,000 is the type of buying that works. How will you know when Hobart has actually bottomed? 3 specific signals to watch. First, days on market falling consistently for 3 consecutive quarters. Second, auction clearance rates rising back above 55% in inner suburbs. Third, net interstate migration to Tasmania stabilizing or turning positive again. When all 3 of these signals align, the recovery is genuine. Until they do, treat any Hobart purchase as a long-term contrarian play, not a market timing bet. So that's Hobart. Australia's biggest property boom of the COVID era, followed by Australia's biggest correction. Inner suburbs are holding. Outer estates are getting hammered. Quality is becoming a genuine value opportunity. Quantity is still falling. If you found this useful, smash subscribe. We break down Australian property markets every few days. And if you want to know which Australian cities are heading in the opposite direction right now, with prices absolutely booming in 2026, click the video on screen. We'll see you in the next one.